With NVIDIA taking up so much oxygen, we're going to take a little bit of a break from that and shed some light on maybe some more underappreciated stocks and markets. Today in Hot Picks, we're going shopping abroad because our next guest says valuations, not only relative to the U.S., but also just in general, are at some of the lowest levels since the great financial crisis. Let's bring in Derek Izuel. He's the CIO at Shelton Capital. Derek, thanks so much for joining us and reminding us that there is life outside of the U.S. market, life outside of NVIDIA. Talk to us about what you're seeing, you know, what all of this attention on one side of the room has done to other areas of the market.
Well, a couple of things. First of all, as you mentioned, Amber, relative valuations are the spread between the U.S. market and the rest of the world is very high at what you could argue is historical highs. And in international markets, just their overall valuation is getting down to levels that we haven't seen since the great financial crisis. So there's some tremendous value. On top of that, international markets aren't quite as risky as they used to be. And much of that is because the U.S. market is becoming so concentrated and such a large portion of the global market. So when you have a regional banking crisis or something like that, it puts a lot of risk into the U.S. market. You're not seeing as much of that risk overseas because of the wide diversity of countries and markets, that even emerging markets are about the same risk level as the U.S. at this point.
That's an interesting perspective. And I wonder, as you are looking at those opportunities, are there certain themes that you're trying to attach yourself to, or are you just kind of looking for these good companies that are in a good business? I mean, maybe we can use Swedish Steel Company, which is your first pick, as kind of an example of what you're looking for.
Yeah, so there's a lot of great opportunities overseas. SSAB, which is as you mentioned, a steel company in Sweden. They focus mostly on higher end specialty steels. So even though steel is certainly a commodity product and a very cyclical business, they're on a relative basis a bit insulated from that, and they have a little more pricing power than your typical steel company. And on top of that, they are actually recognized as, one of the most sustainable steel companies in the world. So their production processes are as clean as you'll find in the steel business. So it's been a holding in our international small cap separate account for some time, and we continue to believe that it's a great position to have in the European market.
Your second pick is interesting. It's in Japan, Toyo, which is a seafood provider. Of course, we know the Japanese markets have been red hot. They're sitting at 30-year highs, and Toyo looks to be at an all-time high as well. Can you still call it a cheap stock?
Well, it's interesting to make a quick talk about Japan. We're big believers in Japan right now. Obviously, it's been taking off, although the yen has been weak at the same time. So there's a bit of a trade-off there. But really good things going on in Japan from an investor's perspective. The stock exchange there, the Tokyo Stock Exchange, is bringing some religion to companies in Japan, imposing reforms on them that should be very shareholder friendly and improve returns. Plus, they're getting some inflation in Japan, and that's actually a good thing because it's been a deflationary market and economy for some time. So if they can break out of that, that will enhance growth. But a company like Toyo Suzan, a food company, us in the U.S., we probably would know them more by the Maruchan brand of ramen and some seafood products as well. Not very exciting, but the stock has been doing really well. And it is a momentum stock in Japan, which is relatively rare. So, and things are still getting better. There's been some regulations in place that should help them with some of their costs, predominantly, particularly wheat costs. And so there's still good future ahead for Toyo. And if you mix that with a bunch of other sort of value-based Japanese stocks, that's a good thing to have in your portfolio, particularly if these are stocks on the smaller side that should stand to benefit from these stock exchange imposed reforms.
How do you think about currency risk? Because to your point, the yen has pulled back versus the U.S. dollar. If the yen starts to perk up against the U.S. dollar, is that a big risk? Is that something that a Toyo or even Japanese stocks can overcome?
Well, the two have been working against each other, it seems, in the last year or two, in that as the Japanese market in yen or in its local currency has been going, shooting upwards, the yen has been weakening. But and part of that is the relative. The biggest driver of the yen dollar has been relative interest rates, and so as those have been shifting around, this has been going back and forth. The yen is getting to a point, as far as its price versus the dollar, where you could see the Ministry of Finance in Japan actually intervene. We're starting to get to value levels where they may have some concerns. So that may act as a buffer such that the market could still continue on with its strength that it's been showing. And yet we may hit a limit to which point the Ministry of Finance steps in and cuts off the weakness in the yen. And so you would end up in that point getting both benefits there of the exchange without the headwind of the currency.
Let's talk in banking. Itaú Unibanco is Brazilian, right? A Brazilian bank. I think it's the largest private bank in Brazil. And it's moved up nicely to the highest level since 2020. Do you still see more upside there?
Well, the Itaú I would focus on for Brazil is actually the parent of Unibanco, which is Itaú SA. It's a large conglomerate that combines the banking with a whole host of other businesses as well.
Okay.
And so banking is just one part of the overall conglomerate. There's manufacturing, there's some commodity products, a good combination. And so it's a great way to get a general exposure to Brazil. We believe Brazil's in a really good location now. A lot of the political issues that concerned investors have passed with the Lula administration coming in, still not without some concerns, but it's just a more investor-friendly environment. And they stand to be a big beneficiary of the reshoring trends that have been going on in the West. As industries and companies are moving back their operations in manufacturing from East Asia, particularly China, and they're looking for either bringing them back to the US or a friendlier, closer, nearby area like Mexico or Brazil. So I think exposure to Brazil here is something that I would recommend to investors, and Itaú is a great way to have.